Well, the cement space, that's been in focus. UltraTech Cement came out with its set of numbers over the weekend. It appeared pretty much in line. The problem was that pricing seems to be under a bit of pressure, and the management sounded rather cautious on that space. Rakesh Arora, founder at GoIndiaStocks.com, joins us. Hi, Rakesh. Good morning. What's your view on, on the cement space? First, UltraTech Cement's numbers were in line. But the pricing pressure that we saw, or lack of pricing growth, is something that disappointed the street. What's your sense?
So, Nigel, normally Q3 is not a great quarter in terms of pricing. And pricing normally moves higher only in Q4 because Q3 you have, so many festivals and, the labor is away from construction. So all those things really plays out. I'm not really worried too much about pricing because prices are already too high. It is just that the cost is also very high and is likely to come down over the next few quarters. To give an example, coal costs are trending almost $100 per ton higher than where they should be normally. And that translates into 800 rupees per ton extra margin for cement companies. So if UltraTech did 900 rupees per ton in Q3, I think the normalized margin in the quarter was around 1700. So it is just a matter of time that coal prices, go back to normal averages and cement companies make a huge amount of margin. I don't think cement prices will come off from the levels they are. And in fact, they'll go up a little bit more in Q4.
Okay, but Rakesh, the street was building in some price increases. Now they're doubtful on that front in their estimates for FY24 as well. Do you think the street is too cautious that actually some price increases will come about? And then things will be okay. Your sense?
So, Nigel, there are three things which are happening in the sector. One, obviously, as I said, Q4, there will be price increases because it's a busy season and demand is normally 20% higher than average. So there is a capacity constraint which comes in seasonally and you see better pricing. But if UltraTech is growing its volume at 12%, that gives you a lot of indication about how the market is behaving. There was a little bit of aggressive push from UltraTech on volume, and volume and prices never go together. So if volume is at 12%, there's no chance prices could have gone up. And the logical reason is that, Ambuja and ACC is going through a phase of consolidation under a new owner, and they are changing things quite a bit. And UltraTech is trying to gain market share, and that is the only explanation for this. So I'm not too worried. This is a small time, change. But if I look from a 1 year perspective, costs are going to come down. Cement prices will go up a little bit in Q4, and margins will expand significantly.
Rakesh, hi, good morning. So, what about growth? You think growth will be solid? I mean, I'm just trying to understand. Cement, of course, I mean, if you just look at the sector, that's fine, but it's always relative, right? Opportunities and opportunity cost. Is it a sector you would really want to bet on, given growth prospects, etc., or is it just a more tactical trading kind of idea? Go on.
Prashant, so 2024 is general elections. And if history is any proof, cement demand actually jumps up quite materially in pre-election year. So I'm expecting that kind of a solid demand growth. It is just that UltraTech was trying to take advantage of the lull which Ambuja and ACC is going through right now and push more volume. So they sacrificed prices a little bit. But see, prices haven't gone down. They haven't gone up as what people expected. But as I was saying, that a big push will come when costs actually collapse in second half of 2023 calendar year, and that is where margin expansion will come. So we don't really need cement prices to go up too much; they're already high. We just want costs to come down, and coal prices will come down in second half of 23. That is what it looks to me.
So it does seem like, things are favorable for the industry, right? On one hand, as you're saying, costs will come down through the course of the year. On the other hand, there is now not just government capex, but private capex that's also picking up, which means more cement, more infrastructure, etc. Given that, who do you think the biggest beneficiaries could be from a stock perspective?
So, Sonia, you rightly pointed out, that things are looking favorable. And in that scenario, while everyone benefits, but it is the large players who are gaining market share, who are expanding aggressively. And that is the place to stay with for all investors. Don't look for small, cheap cement companies. They will give you a pop here and there. but they are not really going to be wealth creators.
But what about the other couple of names? The new promoter has taken over, ACC and Ambuja Cements. They had valuation comfort at one point of time, particularly ACC. Would you still go with UltraTech ahead of both these two?
So in the very short term, UltraTech is going to benefit because, Ambuja and ACC under the new management is going through a lot of initiatives for cost cutting, etc., and which is leading to slightly lower sales volume as compared to UltraTech. So if somebody looking for a 6-month view, UltraTech is better placed. But from a 2-year perspective, I think Ambuja will do much better. And also remember that Adani holds majority in Ambuja, not in ACC. So Ambuja is better placed than ACC.
All right. Thanks a lot for joining in, Rakesh. We're heading into the market opening, but appreciate your thoughts. The pre-opening rates have settled flat with a bit of a negative bias, nothing alarming, just, hovering around that 18,100 mark. But let's get some quick calls at 9:10 this morning. Sudarshan, what are you looking at?
Well, the Nifty is an avoid. Infosys is a buy with a stop under 1540.
Okay, and Mitesh, how about you?
Yeah, I'll go with a buy on L&T, Infotech and Mindtree, that's LTIM, with a stop at 44.55 for targets of 46.10.
Okay, both you folks picking up IT stocks. Interesting. That's been an uptrending space. But the other space that's looking good this morning